Trading is hard until you learn daily bias. If you've ever felt lost if you should buy or sell a trade, or you don't know which stock to focus on for the highest probability trade, it's because you don't understand which way the market is trending. In this video, I'm going to teach you a simple way to identify the trend and daily bias before the market opens so you can have a clear and repeatable entry model for high probability trades. Then I'll show real examples using this entry model so you can see it work in the real markets. So how was I able to catch these trades? Now, this is the last week of trading. And of course, I trade live every single day in front of hundreds of traders in the Accelerator and Traders Lab. But you can see July 14th, we were able to take a very nice trade on Palantir to the upside. July 17th, one trade on Hood for all-time highs. Finally, on July 18th on Tesla, I took the break and retest of the previous day high for continuation. And every single trade I take, I post either on Instagram and Twitter for transparency. But the key here is this took me 3 years to learn. This did not happen overnight. Trading is not a get rich quick business. I had to put a lot of years behind the skills that I have today to trade with the performance I have today. And because of this, the goal of this video is to simplify how to select high probability stocks and find trend for the day. This way we can enter the most high probability setups. This will of course be done by finding the daily bias. And this way we don't have to look at hundreds of different stocks to trade. We can focus on 1 to 2 quality names that are setting up every day. And this makes trading much more simple but efficient. So to understand which stock I will trade for the day and where momentum, volume, and where high probability entries will happen, I have a simple 3-step bias strategy that I use before the market opens, which means I use it before 9:30 a.m. Eastern. And this way I come into the day with a clear plan on which stock I want to focus on. And based off the stock I'm focusing on for that specific day, I will then take my trades. Now, like I said, for the 3-step bias strategy, there's going to be, of course, 3 steps. And the way we want to look at bias and understand which way a stock will trend is by understanding the top-down strategy as well. This 3-step bias strategy is a combination of not only the top-down strategy, but also some of the things that I've learned in the last 7 years of trading. So what is step 1? Well, for step 1, we want to create a higher time frame thesis. A higher time frame thesis will not only help us navigate the market much more clear and simple, but at the same time, a higher time frame thesis will let us know which way the stock wants to move. Because if we're looking at the daily time frame and the daily time frame looks very bullish, well, that means the 4-hour time frame will most likely follow the daily time frame, and the 1-hour time frame will also follow the daily time frame. This is because the higher the time frame is and the trend on the higher time frame, it will also then be the same trend on the smaller time frames as well. And therefore, the first step will be to create a higher time frame thesis, and we'll talk more about this when we get into the examples. For step 2, we want high probability but lower time frame levels. Now, for myself personally, I draw these levels on the 1-minute time frame. However, whatever time frame you execute on, which could be the 5-minute, the 10-minute, the 15-minute, that's the time frame you're going to go down into to mark out these lower time frame levels, and these will be high probability areas, because we know not every single point on a stock is a high probability area. Rather, there are areas of demand and supply, and when a stock does dip into them, that is where buyers will step in, or if the stock comes up to them, that is where sellers will step in for a move back to the downside. So it is our job to identify these high probability zones and areas, and that's what we're going to do in step 2. And once again, when we get into the examples, this will make much more sense. And finally, for step 3, we're going to use a profitable entry model. Now, for me, I have multiple setups that I talk about. However, the backbone of all those setups relies on the break and retest strategy. And therefore, for all the examples that we talk about in this video, the profitable entry model I will be using is the break and retest strategy. So let's come on over to step 1. For step 1, like I said, we're going to the higher time frame and we need to wait for a clear trend to form. We do not trade range or choppy price action. How are we supposed to look for this trend? Well, for step 1, we can see here we have a low right here. We create a brand new high, and then when the stock stock dips back down again, it creates another low, but this low is higher than this previous low. And as we continue this trend to the upside, you can see this brand new high is higher than this previous high as well. This shows me that this stock is in an uptrend and we want to focus on this stock. We do not want to short this stock, but rather we want to look for an area of pullback where it will create the next higher low, and this will of course be where we want to enter the stock for continuation to the upside. We want to look for a clear trend to form, like I said, on the higher time frames, and this will be either the daily, the 4-hour time frame, or the 1-hour time frame. And we can also look for a downtrend. All this means is when there's a high up here, we then create a low, and on the pullback, we don't go back to this previous high. Rather, we put in a lower high. This shows us that the stock is indeed in a downtrend, and therefore when we create this next low, we want to look for the area where this next lower high will be created, as this is going to be the lowest risk that we can get on the stock, but it also offers high reward, because if we enter into this area, we can be looking for brand new lows to form, and because we're in a downtrend, this could have continuation to the downside. So on the daily, 4-hour and 1-hour, we're going to be looking for a clear trend to form, and then for step 2, we're going to draw high probability levels. Too many traders come in and they overcomplicate this. Keep this extremely simple and repeatable. For me, because we're trading this on the lower time frames, I mark out the same levels every day. These levels include the pre-market high and pre-market low, the previous day high and previous day low, and of course the 5-minute open high and low of the day. And once again, when I say open of the day, I trade from 9:30 a.m. to 11 a.m. Eastern. So as we can see on the chart here, we marked out the previous day high up here. We marked out the pre-market high here as well. The 5-minute candle was formed, and therefore we marked out the 5-minute high. We also marked out the previous day low, and finally we marked out the 5-minute low down here. For step 3, we want to enter using one profitable entry model. Now, you may have your own entry model that you enter off of, and that's completely fine, but I want you to ask yourself 3 important questions. Question number 1 is, what are you trading? Are you trading stocks, options, futures, forex, crypto, or something else? Based off of this, do you believe the entry model you're trading aligns with the instrument you're trading? And of course, the entry model that I'm going to explain in this video does align with all these different instruments. The next question you want to ask is, what is your strategy? If you can't explain your strategy in 3 simple sentences, it means it's too confusing. So you need to have a simple yet repeatable strategy that you can trade every day. Now, for me, this could be the 5-minute retest, the pre-market retest, or the first candle strategy. However, for yourself, you need to ask yourself, what is your strategy, and can I explain it in 3 sentences? And finally, ask yourself, what time frame do you trade, and stick on that time frame for execution. Now, for myself personally, I trade and enter on the 1-minute time frame. However, if you trade on the 5-minute or 10-minute, that is the time frame that you want to be focused on. That doesn't mean that's the only time frame you're going to look at. Therefore, when we're actually live trading in the markets, focus on the time frame that you're trading. Don't try to overcomplicate it. The reason we use this daily bias strategy is so we understand which way the stock actually wants to trend in the day. But once we understand that, we can focus on finding the lowest risk entry on any of these time frames to enter for a high quality trade. So for the example I just showed you, we knew that this was a bearish stock coming into the day. We also marked out the levels for this, and you can see this trade, because we had that bearish thesis, all we had to look for was a low risk but high probability trade. What happened on this stock? Well, we broke below on the 5 minutes. We then came back for the retest, and we retested not only the previous day low, but we also retested the pre-market low. So these are 2 levels with strong confluence on top of weak price action. Once we enter in, when we see that weak price action, this one came all the way down to low of day, and it was a very simple trade to execute using the daily bias strategy. So now that I've shown you the exact steps to find the daily bias and which stock to focus on every single day, let me show you real examples of this daily bias strategy in the real markets. This way, you'll have a much more clear idea of exactly how to use this strategy, and by the end of the video, you'll learn exactly how I use this daily bias strategy in my own trading. Okay, so here we are on the first trade. Now this is on Nvidia, and on this name, we're on the daily time frame. So to identify which stock to focus on during the day, we want to be looking for what is happening on the daily time frame. On this stock, we can see the daily time frame, we have a very clear move all the way to the upside. Along with this, we had this low down here, but from there, we then created another higher low and another another higher low right here for continuation to the upside on the daily time frame. Therefore, market structure is very simple, and it is telling us that we should look for a potential move to the upside as daily time frame is very bullish. Now, for key levels on the daily time frame, all we have to do is mark out the previous day high, and we're going to mark out the previous day low. This is going to be key areas of liquidity. And now that we've seen the daily time frame is very strong, let's go over to the 4-hour and 1-hour time frame. Here we are on the 4-hour time frame, and what do we see? Well, we see we had this low down here. We then created a higher low along with a high. We created a brand new higher high, and now we're creating this high here with a little bit of consolidation. So on the 4-hour, it looks very simple to me that it needs to break above this previous day high for a retest and continuation to the upside. The previous day high is something that we can trade. It is within our trading setup. However, before we look at that, we now know that this is a name that we should be focusing on, and the plan would be to focus on it above the previous day high once it breaks. But now we need our key levels. This would be step 2. So let's go over and draw those key levels. Okay, here we are on the 1-minute time frame. And like I said, our key levels every day are going to be extremely simple, but even on the 1-minute time frame, you can see we broke up, we're consolidating, so we need to break above the previous day high for the retest for continuation. However, if we zoom in, like I said, I draw the same levels every time. They're repeatable yet simple. The first level I always draw is going to be the previous day high and the previous day low. The second level is going to be the pre-market high and the pre-market low. We can see the pre-market high is very, very close to the previous day high, and therefore we don't have to draw it out in this example just because of how close it is. However, we will draw out the pre-market low as this is a level that we want to draw out just to make sure that sellers don't break it back below. The only other level that I'm going to draw out is going to be the first 5-minute range. However, if we break above the previous day high before the 5-minute range, then we could potentially look for a retest if we have very strong price action. So let's see exactly what happens. Right here, you can see the amount of strength that Nvidia has right into the day. Buyers are stepping up very aggressively. We broke it above the previous day high. However, we do want to draw out the 5-minute high just because this is a level that I draw out and it's repeatable. For our actual setup that we would be looking for now, because we know the bias is extremely bullish, is the retest back into the previous day high and then continuation from there. If the stock keeps continuing up and doesn't have this pullback, we can also look for the break and the retest of the 5-minute high for continuation as well. Let's see which one sets up. And right when we touch that previous day high, you can see the amount of buyers that stepped up with a big range candle. Now, this shows to me that buyers are very aggressive on this name. We know the daily bias is strong. We know strong price action stepped in on the previous day high, and this makes this a high confluence entry. I would look to enter into the trade here. Our stop loss simply just has to be a break below the previous day high, because we know if we break back below, then the daily candle won't look good, but at the same time, momentum would break in the intraday time frame as well, and we would be looking for at least a 2R multiple. In this example, that 2R multiple comes near the 166.30 key area. This is where we would enter into the stock. So let's enter into a position here and let's see exactly what happens. And just like that, we can see this was a very aggressive move to the upside and a solid trade off of that previous day high for continuation as our first example. Now, this is the exact same trade that I took using this daily buy strategy in the Accelerator and Traders Lab. And the reason I trade live is because, of course, I teach the concepts, but I want to show that they also work live in the real markets. And this is the exact trade that I took showing this daily buy strategy. And I do have a very big announcement coming soon for traders who want to level up their trading. If you're interested in leveling up your trading for absolutely free, make sure to join the waitlist in the description for priority updates and a priority in line. It will be absolutely free, but the goal is to teach you more about trading the right way. With this being said, this was the first example. Let's go over to the second example. Okay, here we are on the second example. This is Apple, and on this stock, we can see this is actually a little bit more bearish. We have a high up here. We created a low. We then created a lower high from this previous high, and then once again we created a brand new low, another lower high around this area, and now we could potentially be coming in to make another lower low on the daily time frame, because so far we are still bearish on the overall daily time frame. So the daily time frame is simply telling us that this is bearish and we want to look for a potential short side move. Now, if we zoom in on the daily time frame, we can see very bearish price action coming in here here as well. So what we want to do is look for that short position, but we have to mark out the daily high and the daily low. I'm going to mark out the daily high and daily low here, and let's go over to the 4-hour time frame. And on the 4-hour time frame, you can clearly see the high up here. We created a low, we created a lower high here, another lower high around this area as well, and now we just created a new low from these equal lows here, so we can be looking for continuation once again to the downside, and the 4-hour is simply confirming what the daily time frame told us. Now what we need to do is go to the lower time frame, draw out our high probability levels, and then look to enter the trade. So here we are on the 1-minute time frame. You can see a very nice downtrend on the day before. We have the previous day low here, and this actually coincides with the pre-market low, showing that this is a very strong area of support that we should be focusing on for the break. But we want to draw out the pre-market high here as well, as that is another area that we can be looking at. However, for this trade specifically, because it held previous day low and pre-market low at the same area, we want to see a break below, a retest, and then continuation to the downside. I still need to draw out the first 5-minute candle. However, the plan coming into the day would be a break below the previous day low, a retest, and then continuation. All right, so let's play this day out. Right off the bat, you can see we already broke below the previous day low. This candle is currently breaking below the previous day low, and you can see the weakness overall on Apple intraday as well. Now, what we need to do is wait for that break and then the retest back into this previous day low. And you can see we broke the low and now we're retesting. We also have the 5-minute low down here. We don't have to mark out the high because we know this is a bearish day, but we do have a low risk pullback here with an upper wick showing us that sellers did step in near this area, and this is a high confluence area because we have not only the pre-market low, but we also have the previous day low here as well. What we can do is look to enter into a short position here. Our stop loss simply has to be a candlestick closure above the key level that we're entering in on, and we need at least a 2-hour multiple. In this example, that 2-hour multiple comes a little bit below low of day, but let's enter into a short position here with this weak price action, and let's see what happens. So as we can see, this trade actually ended up moving down to low of day. We did have to sit through a little bit of consolidation, but it did hit our profit target. And this was a fantastic way to show how to find which stock to focus on during the day and how to find daily bias for higher probability entries. Now, if you want more information on how to start trading as an absolute beginner, if you want more information on strategy, market structure, price action, or anything about trading, make sure to click the video on screen now. It is a full playlist going over 10 hours of trading education for absolutely free. If this video helped you, make sure to leave it a like. If you have any questions, put them in the comments down below. Make sure to subscribe to the channel, follow me on Instagram and Twitter for more education, and I will see you next week with a brand new video.